Right. So coming to the next one, Sunil Verma is conducting stat audit of Upshant Limited, an unlisted public company for 3031 as an engagement partner on behalf of Verma and Associates, having six partners, out of which four are chartered accountants, two are advocates. This was third consecutive year of audit by the said audit firm of Upshant Limited. For the current year audit, a new engagement letter was sent by the firm to the company. Upshant Limited changed its employee remuneration policy from 1st April to provide 12% contribution to PF on leave encashment also. As per the leave encashment policy, the employees can either utilize it or encash it. As per 31, the company obtained an actuarial valuation for the leave encashment liability. As and when the employees availed the leave encashment, the provident fund contribution was made. The company was not sure whether the employees will avail the leave encashment or utilize it, and obtain consultancy of Mr. Sunil for the correct accounting treatment to be given as per the relevant Ind AS applicable. Because of the inherent consistency of IT processing, Sunil did not consider it necessary to increase the extent of testing of the relevant control and inventory handling and maintenance system of the company. Further, for this year's audit, Sunil observed that the controls over sales order processing have been weakened due to change in hierarchy on the organization, which he has also discussed with the management of the company through a letter of weakness, SA 265. Sunil, based on the evidence available, narrowed his range for the purpose of evaluating the management point estimate on a particular item which required accounting estimate to be disclosed in the balance sheet of the company. That means for contingent liability. The financial statements of Upshant Limited was required to be amended due to the occurrence of a subsequent event after the balance sheet date, because of which the audit report was also amended by Verma and Associates, which indicates that the audit procedures on the subsequent events were restricted solely to the amendment of the financial statements described in the relevant notes to the financial statement. Apart from receiving his remuneration as a partner in Verma and Associates, also received a sum of 90,000 as renewal commission on the life insurance agency license held by him for the said purpose. So clause 11 part 1 first schedule engages in any other business or occupation, permission granted generally, specific permission. Right, so holding life insurance agency license for the limited purpose of getting the renewal commission allowed. It is given under the list of the general permission. Now, for what type of control in inventory handling and maintenance system, Mr. Sunil would not have considered it necessary to increase the extent of the testing. Right? So, due to what reason he would have decided not to increase the extent of the testing? Because of the inherent consistency of the IT processing, Sunil did not consider it necessary to increase the extent of testing of a relevant control in the inventory handling and the maintenance system of the company. Did not consider it necessary to increase the amount of testing of a relevant control. Right. So what could it be? Because it's an application control, automated control, process level control, or an ELC, process level control, or the entity level control. So now he says, yes, which application control? You can check more or less. PLC, ELC, okay. Automated control. Once it's an automated control, it's like, one, if the control is right, 1,000 times the transaction will be right. And once the control is wrong, 1,000 times the transactions will be wrong. So it doesn't matter how much of the testing you do over there. So that is why it is the automated control. Whether Sunil is permitted to hold the license as a life insurance agent? Yes. As general permission has been granted by the Council of ICAI? Yes. If specific permission has been obtained? No, it is not permitted for a CA to do so as per the recent decisions of the Ethical Standard Board. License as a life insurance agent can be held by CA not for the purpose of getting renewal commission, but for some other purpose that does not amount to disregarding of the profession. No. Yes, as general permission has been granted by the Council of ICAI for the said purpose. Till what extent ordinarily Mr. Sunil would have narrowed his range for evaluating the management point estimate for the particular items disclosed in the balance sheet? To equal or less than materiality in order to cover all reasonable outcome, to be equal or less than performance materiality to cover all reasonable outcome, and again same point but only possible outcome. Right? So obviously it is the reasonable outcome, and to equal or less than the performance materiality, because performance materiality is derived from the materiality. Whether due to amendment in audit report, its date need to be changed, and what other alternative was available to Verma and Associates respect to the amendment in the financial statement. So that is SA 560 subsequent events. Date of audit report will be changed. Alternate to provide a new or amended audit report by including key matter paragraph. Original report will remain unchanged and an additional date will be included. Alternative available was to provide a new or amended audit report by extending the basis of opinion paragraph. No. Date of audit report will be changed. Alternative available was to provide a new or amended audit report by including an emphasis of other matter paragraph. So date of report will be changed. An original date of report will remain unchanged. An additional date will be included. What we study in SA 60 called as the dual dating, that now there will be two dates in the audit report. Alternative available was to provide a new or amended audit report by including an EOM or an other matter paragraph. Okay. And the last one, what advice Mr. Sunil should have given for the accounting treatment of the leave encashment liability? Provision should be created each time when the company makes the PF contribution. Provision should not be created because as and when the employees avail the leave encashment, the contribution should be made. Full provision should be made by the company for the liability with respect to 12% of PF on amount of leave encashment as per actuarial calculation. Provision should not be created as there was an uncertainty whether employees will avail encashment or utilize it. No, as per the actual basis, as per the concept of prudence, the full provision should be provided by the company. Okay, right.